All right, Bismillah. I'm here. Rather be sleeping or doing something else right now, but this is part of the long game. I'm gonna stop reading the date because why am I doing that? And it's right on the screen, right? Anyway, here you go, and here you go. 7 fundamentals to one good trade. That is every trade that you put on should have these 7 principles or fundamentals attached to them. Proper preparation, again, that includes proper rest, proper sleep, proper chart analysis, that's being in tune as much as possible to your objective, and that is to trade well. Hard work, meaning that you are diligent in your approach to the market. I wrote narrative. The narrative that's important to me in my trades, knowing what has price done, what is price possibly about to do now. That's kind of like the story behind what price is doing, right? Or maybe doing what it hasn't done lately, right? And what it may do soon, so to speak, because as a day trader, scalper, then that's the ballpark, right? And patience, waiting for those trade setups that you have the most comfort, the most confidence in, to formulate and pulling the trigger when it's time. Having a detailed trading plan as it relates to that. You should at least have 3 things per trading plan, and that's your entry, your ideal entry, your stop loss, and your exit. So your exit, discipline in regards to all of that, holding true to the same routine day in, day out, communicating ideals if you are able to do so. And even if that isn't, just documenting things for yourself, like keeping a journal. That's necessary. Emotional journal, a psychological journal, and a journal of your trading plans or your ideals while you are in the trade, especially if it's again like a scalp or a day trade. So something so you can come back and revisit it and replay it to see, hey, what type of state of mind was I in? What was price doing that made me uncomfortable, that made me not take the ideal entry? All those things, right? Whatever you think is relevant to your future self, right? You want to give your future self as much information to work with to help you improve for the next time you see battle, right? Anyway, let's move forward. Today is Thursday, is it? No, tripping. It's Wednesday. It's Wednesday. I knew that, right? Day's over. Anyway, moderate news, 11:31 p.m. Eastern Standard Times. And tomorrow you got unemployment claims at 8:30 a.m. Let's see. All right, FOMC. Barkin speaks. So, all right, let's move forward. Anyway, this is how I usually trade. But anyway, let's see what the dollar has to say. Very choppy, very ugly day. Very ugly, choppy day. Very ugly. Was it tradable? Maybe. It's very ugly, right? It's pretty much hung out around the new week opening or the previous 2 days low, right? The range. It's pretty much all it did. Hung around the previous 2 days low. And on this time frame, you have an inverted fair value gap. Well, a reclaim, so to speak, bearish fair value gap here. Let's just use that. Not gonna spend too much time because I am sleepy. I have to get my homework done though, right? So it's all part of the game, right? All right, so it's your bearish fair value gap, and you can kind of see price and trade it inside of this gap from the new week opening gap. So pretty much traded between two gaps. Could you have worked with it? Sure you could have, right? All right, so this is the midnight open. Here's your Asia range here. Let's add some color. Let's add some color to this, just to make it easier to see. So it doesn't have the same parameters as I have this one on, but bam, 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 bam. All right, and that's actually what I have it on here, 1 to 5, not just 2 to 5. Anyway, we can see that price, the London session ran the Asia session highs. This is where you can now look for a break in market structure, right? Ideally on a lower time frame. Once this happens, this is suitable. So here's your run on stops, obviously. Buy stops. Just gonna map it out just for the sake of the trade setup, right? And again, we have fair value gaps and the new week opening gap that we identified on the quote unquote higher time frame, the 1 hour time frame. So here's your buy side liquidity. It's crazy, right? I do the same setups all day, every day, right? Anyway, here's your market structure shift. And what's the next step? What's the next step? You want to look for a retracement back into fair value gap. That's above, ideally above 50% of the range, right? And I'm gonna just use the fibs, but you can use whatever you want, right? All right, so check, we have a gap here, then retrace back into that. Have an inverted fair value gap here, but you certainly did not have to take this inverted fair value gap entry. I think I've been making them like charcoal, right? You could have here's your short, pull down, get it got on this bearish fair value gap here. I'm not gonna draw it out here. Trade it down. Probably would have panicked there, but your stop should have been up here. Stop should have been up here. So you have a similar scenario here. Short retrace. Here's your short entry here. Could have gotten anywhere here as well. You see the inverted fair value gap. You can see it trade back into consequent encroachment here. Here's your short, taking out the Asia lows, and let's go back like 3 days. So there's 1, 2, 3. So kind of traded into a gap over here. And eventually took out these swing lows over here. Yeah, got a gap here. gap here as well. So exactly what it did. Anyway, that's this session. Right, pretty much traded into this volume imbalance and this bullish fair value gap. Anyway, that's not that heavy, right? So that's one entry short. Got a run on sell side here. Get a re-entered here on this inverted fair value gap again for a long. You didn't see the inverted fair value gap because it got in on the volume imbalance. So there's your entry here. Boom. Targeting internal range liquidity. Here. And the order flow was already bullish. So you wouldn't have been anticipating anything too wild. Also, you can kind of see it as pulling back into this range that it broke from. So you wouldn't have really tried to hold on for dear life, so to speak. You want to get in, get out. So there's your short, inverted fair value gap. So what we got? One trade, two trades identified, third trade short. So we got a short, we got a long, we got another short here into this inverted fair value gap here. Technically push back up, took out sell side, took out buy side, apologies, took out buy side, but this was an entry for this setup here. Boom, short into this small fair value gap or this inverted fair value gap, and again keeping this 1 hour bearish fair value gap in mind and seeing price is not willing to go higher, but also the same setups. Run on buy side, breaking market structure, retrace into an imbalance above 50% of the range. Your stop could have been here on this time frame, and your entry pretty much over here. And technically you could have held to take out this, take this out, and just doing like standard deviations, unless you want to look back and see any internal or external range liquidity back there that we just kind of saw from like 2 or 3 days ago. Anyway, so here you have it, trading in the range, getting hold above consequent encroachment at 1 hour fair value gap. Another short entry during the AM session. And again, it's a tight range. Broke out of this range. Boom, pull back into the range. So more reasons to not necessarily marry the position. Anyway, plenty of opportunities here. Not the point. Just wanted to identify several setups to see the ES. All right, before we do that, then I kind of want to touch on something over here. So this is the dollar DXY, the ES continuous contract, the NQ, and the YM continuous contract. And this is what I wanted to highlight. So you see, this is at 550. Then you have like 720. There you go. feel like saying, do you see what I see? Do you see what I see, buddy? Anyway, eyeballing it. But anyway, you can see that the YM brand sell side here, 725. YM ran sell side, the NQ and the ES did not. And on top of that, you had the dollar dropping, even though it was in a tight range, right? So you have your SMT divergence, you have the dollar back in your entry, you have the NQ and the ES fell in to make a lower low or run sell side liquidity. This is your entry. Not only that, it's like a legitimate entry, right? Anyway, just wanted to highlight that so you can kind of see why this long entry here. And if you missed this long entry, what's going on here is another entry, another optimal trade entry, but also into this fair value gap. But also it's a hidden optimal trade entry using the previous day's high to the intraday. This time this was the intraday high. So use the previous day's high and intraday high so far and pull back into 61.8, 70.5 on the Fibs here. Most certainly did not have to do that. Could have just used this. And right, because ideally, if you think like support and resistance, you say, all right, price is going back down to retest broken resistance turn support. But you see this big, all right, it's a 5-minute chart though, so it's not really that beefy, but it's bigger than the other candles, so you can see that it broke it with force, right? And then just pull back into this range, and that's your entry for the long, and it's one standard deviation. So that's one setup. So technically you got one setup here, long entry, 1, 2 entries. This is where the SMT divergence occurred, so to speak. We got in here, and there's an inverted fair value gap that I highlighted with these orange horizontal lines. It's the inverted fair value gap here. Price traded into it, took off. So that's technically 2 long entries, and here's a reason to add is here on this fair value gap. Again, pull back in, take off, targeting this swing high here. I wouldn't even have used, this is a target, but I would have used this swing high as a target. Just kind of exit, like, because this is not robust, right? So technically I feel like that's it, man. Hang it up. Let's shut the video down, right? But anyway, let's take these colors off. And so we got the previous day's high here. We do have why I'm going way back here, right? Past 3 days. All right, so we have a reclaimed inverted fair value gap here. And you can see, as usual, that I like to point out that price was respecting this fair value gap to some degree. You can see it multiple times. And then you can see price traded back down inside. Here's your entry. So it's not surprising, right? It's not surprising. So anyway, here's the 5-minute chart. I kind of skipped the 15-minute chart. And all right, so yeah. So you got to run on sell side here on the 5-minute chart. Run on sell side here. Break in market structure here. And retracement into this inverted fair value gap. So reclaim the consequent encroachment of this 1 hour inverted fair value gap here. Take off. So far, London session was dead accumulation, kind of like manipulation here or here. This is the manipulation. Here's a retracement and take off. All right. This right here, I was looking at a 1 minute market maker sell model. Right here during the 315 to 345 macro. So it's literally a trade setup that I always see during this power hour, particularly in the 315 to 345. A 1 minute XM model, because it may not be a bearish or a sell model, it may be a buy model. And usually during the macro of 550, I'm gonna say 545 to 1600 or 4 o'clock, 4:15 sometimes, it's usually like a continuation of this here. But anyway, in this case, we'll be targeting these swing lows here, relative equal lows. So I probably would have got on this candle here, even though it dropped down lower, but that would have been sufficient, right? Entry, have an inverted fair value gap, multiple entries here, even an entry here, short, retracement, again, doesn't matter, short, whether you exit it here or here, again, because why? Because price is literally trading inside of this range, this tight range here. Why would you want to risk it all? See, very tight, very tight, very tight range, very tight. Right, very tight range. Discount the premium. So yeah, I would have got out. Well, anyway, if I woulda, wisha, shoulda, coulda, woulda. But anyway, you never know if I took the trade or not. So, all right, so that's it. ES NQ should look something just like that because we already seen the SMT divergence. So let's go over here. Can you guys tell I'm like literally making these videos for myself? Oh, just talking to myself. Wait, it's all good. It's all good. Tell me if I care. Ask me. Anyway, so all right, so here we have previous ace range. We have price like approximately midpoint of the range. There's really not much of a imbalance here, excluding this or here. I would have chose this because this is most recent. Right. Or here as well. Could have chose this. Or here. Anyway, it's all in the same range. I'm not picking and choosing. You guys already know this is what I prefer, inverted fair value gaps. So you can just, I'm not going to highlight anything here. Just kind of want to see what it looks like on this time frame. You got a breaker here. Bullish breaker here. You lied to me. You said you wasn't going to highlight anything. Anyway, that looks nice, right? That looks nice. You also got a fair value gap here. Looks okay. Looks pretty good. Like a doctor, right? Like doing a checkup, right? Looks pretty good. Anyway, go to 5 minute, look for a setup. Okay. Same situation. This looks better than the ES though, right? But anyway, London session runs the Asia session lows. That's a run on sell side. You have a break in market structure here, pull back into an inefficiency. Here's your entry. Another break in market structure, pull back into the same inefficiency. Or the one, let's see what's going on here. Problem, right? It's about right. What I mean by that is this. The bottom of a fair value gap, ever so tiny, or you can use the inverted fair value gap. All right, I mean that's pretty it's pretty tight. Let's see what we got. Come on, man. Let's try this. And when I hear my guy be like, I'm flabbergasted. They'll be like, then you get into this and you be like, I'm flabbergasted. I am like lost for words. Salute. Anyway, what I'm doing here, measuring like this, doing this, is literally measuring out this inverted fair value gap here. And that also has a story to tell. That's why, right? Let's see. Let's take this, put it at that would be there. Let's see what the bodies of this candle is. A little quarter, little tick, one tick difference. It's awesome. Anyway, it's excellent. So that too is, again, our entry is around this level here with the SMT divergence. Here you could have got in here, break a market structure, retrace into this small fair value gap or inverted fair value gap here, and lift off. And where was the previous day's high, which we didn't address? That's pretty much it, right? Anyway, you go. Boom, retrace into an imbalance. Yes. Right, same principle into this imbalance, but yeah, it's pretty cool, right? I didn't even write it. that's your entry. Multiple entries. I like this and this. I think where I get that from, right? This is the most dynamic price action. This is the start of it. This is the break in market structure. And as you pull down into an inefficiency, like we mentioned, optimal trade entry long. And on this time frame, almost 3.5 standard deviations from our range that we identified. So that's one setup. There's a second setup. Wouldn't have really think I'm wilding out, right? With these optimal trade entry hidden OTE entries, right? It's on you. It's on you, man. Anyway, that's the swing low. The swing high that it broke is so this is the range and into imbalance optimal trade entry, and it's literally respecting those levels too. And we have our 1 standard deviations from the range that we identified here. All right. At this point, I don't know how many entries we covered. Let's see if there's a. Yeah, this is all like unimpressive business right here. But let's see if there's a. See if we can get a 1 minute. Where art thou? Okay. Let's see. All right, so run on stops here, run on all these stops here. This run on buy side liquidity. We have a trade down, no break in market structure. Run back up, break in market structure. Retrace up. You can use this. You can use this inverted fair value gap here. And then you'll technically target these lows here. So yeah, that's your entry here, boom. Retrace into this. So that's one as well. You can see short. So that's a theory. It's not just a theory, right? It's more like something to consider, back test for yourself. I normally, like, I think sometimes you see a setup and you just think like, it's a fluke, right? But it's really probably onto something as long as you can identify certain variables of the trade that you can reproduce, right? Time is one of those things you can reproduce. Well, reproduces itself, right? You start looking for setups on certain macros or certain time frames and say, hey, I've seen this trade time and time again during this time frame, on this time frame, right? Ideally, I typically see this trade set up on the 1 minute during this, I'm going to say the entire power hour, but I particularly like the 3:15 to 3:45 time range. And then there's always something like a little wonky that happens after 4 o'clock, right? Either it continues or it kind of does like a retracement. So that may be contingent on if price is running sell side, then you have like a break in market structure or taken out of the internal range liquidity. So yeah. Anyway, don't be greedy. Don't be greedy. Take good notes, right? Anyway, I'm done. You guys have a good night, man. I don't know how long this video was, but deuces.